Today, we are talking about current global logistic business environment, potential opportunities, and Expo Lanka past earning performance and ability of manage superior performance during current uncertainties. Global trade has become increasingly connected and complex over the last 2 decades. Raw materials produced in one country can be processed in another and then assembled into finished products in a third country, only to be delivered for final consumption to a fourth. This increasing connectedness makes the free flow of goods necessary for improving efficient global trade. Freight forwarders are an integral part of the supply chain and act as intermediaries between the company that makes the shipment and the final destination of the goods. It is the coordination and shipment of goods from one place to another via single or multiple carriers via air, marine, rail, or highway. Due to the vessel delays on the USEC, the potential for additional blank sailing in September and October may create unanticipated space and capacity constraints. These reductions may limit importers' options for any seasonal rush cargo and force companies to use air versus ocean. Smart freight forwarding companies had rightly predicted the effects of trade tariffs on Chinese exports. When businesses and factories started moving from China to countries like Vietnam, Taiwan, Cambodia, Thailand, and other SEA countries, freight forwarders also started preparing to move the bulk of their logistics operations to the relevant countries. Ocean carriers continue to cite congestion at U.S. and Canadian ports as the reason for canceling sailings in September, a cut in vessel service that has been flagged, and the latest CNBC supply chain heat map shows the congestion is not subsiding. China, manufacturing orders, and ocean bookings. All the congestion at the ports is skewing the impact of the decrease in container bookings as a result of the pullback in manufacturing orders. FreightWave sonar shows future import container orders continue to drop. As booking levels, which indicate future import volumes, continue their descent, peak season demand on the ocean looks muted. Softer demand on the ocean is leading to carriers increasing the number of blank sailings in an effort to slow the rapid decline in Trans-Pacific spot rates. I choose few more quarter financial report including latest ones. Then convert each turnover into dollar amount using by each quarterly exchange rates. Now all turnover recorded USD currency as mentioned in table and find peak turnover growth in second, third, and fourth quarters in 2022. Especially third quarter recorded $1 billion profit after tax. Because there was a peak of freight charges in that quarter and start diminishing USD turnover till fourth quarter 2022 and continues in first quarter in 2023. However, both quarter recorded rupee turnover higher than third quarter. Because of, there are notable hike in exchange rate, that is, LK rupee value depreciate. USD turnover continuously dropped to latest quarter financial with continuous dropping freight rates. But didn't see significant drop between both rupee turnover even though showed a difference in USD turnover in fourth quarter 2022 and latest financial 2023. Freight rate impact to coming second quarter financial 2023 during the further rate downfall. Rupee value is stronger, stable and same level. According to this financial figures, understand one thing, that is, even though freight rate declined there are no significant drop its USD revenue income compared with comparative figures. That means, when freight rate coming down, company increase their number of sales volume. If this trend continues upcoming quarters, no worry about freight rates variances. Because freight rate fluctuation will be covered by number of many sales volume. When we look at current global uncertainty, there are possibility to rebound air freight rates, not so high seem to stabilize reasonable level. Again China extended city lockdown and delay of sea delivery. 2 of the major trade lanes for U.S. shippers are under strain this peak season. The heat wave in China has shut down key manufacturing and the growing backlog of European imports is expected to spill over into the first quarter of 2023. The rows of empty containers take up important land capacity at the port and restricts trade fluidity. With port delays increasing, logistics companies are keeping an eye on air as an alternative to ensure holiday delivery. Due to the vessel delays on the USEC, the potential for additional blank, cancelled, sailing in September and October may create unanticipated space and capacity constraints. These reductions may limit importers' options for any seasonal rush cargo and force companies to use air versus ocean. Christmas and few more festival are going to happen rest of year. We have seen cargo go on planes that was not originally planned as air freight. Naturally the retailers want to meet the seasonal demand. Right now, we see air capacity, especially out of China and out of Vietnam as a hot market. Apple Watch and some iPad production has moved to Vietnam from China. Then that biggest business opportunities for freight forwarding companies who doing in the business in Vietnam. Seen that USA and China again start trade war with current situation like previous, then USA banned Chinese logistics companies and moved to others. American larger-scale business will move to other countries for establishing its business. This forecasting figures extract from SG Holding and they initially predict April 28, 2022 and again review those figures didn't make any changes again 1st of July, 2022. They forecast improvement of logistics business revenue compared with actual even though globally freight rate coming down. That's mean SG Holding satisfies with current and existing strategic business, freight rate stabilization. In the freight and logistics market, Asia-Pacific is the fastest-growing region globally due to the increasing logistics in ASEAN countries and the presence of major economies like China and India. Additionally, the high government support for the logistics sector in the region is also a factor boosting the industry growth. Expo Lanka majority business expand in Asia-Pacific region and able to fast-growing its business as well as turnover. At last, conclude that SG Holding business strategic guide to its subsidiaries maximize return with managing risky level during the period of macroeconomic changes. Recently SG Holding and its director acquired many quantities at current market price level for the purpose of enhancing shareholder return and capital efficiency as they mentioned. Cannot interpret behind share buyback scenario. However, director dealing gave the positive signal for its shareholder. Expo liquidity now a little bit lower than previous and Expo may settle at correct level with potential earnings capacity. Steady recovery of the global economy, rapid growth in emerging economies, and a technology-driven cooperative supply chain network are among the key factors expected to drive the overall freight forwarding industry. Good luck. Thank you watching the video, please subscribe channel and we'll meet again such a crucial analysis.